All right, the market was down a lot yesterday. It's down to open today, but rebounding a little bit. Bitcoin is up 150% this year. Guys, this, depending on how you look at it, this is just the market doing what they do. We interviewed Morgan Housel last week. He wrote a phenomenal book called Same as Ever. And the one thing he talks about is booms and busts. He says, people will sit there and say that stocks will only go up forever. But at some point, they go up to a point where the expected return is 0% and then things come crashing down. It's not to be a fudster and put fear, uncertainty, and doubt in your mind. What it is to say there are 3 guarantees in life: death, taxes, and cycles. And if you think we're out of a cycle, that it's not possible, that markets will go down, guys, as he says in his book, every 5 to 7 years, you're going to have some sort of big correction or crash. Now, we had one in COVID, but it was 30 days. I was talking to my brother last night and saying, Mikey, in your after high school career, you've seen 2 crashes and they each lasted less than, one was 6 months and one was 30 days. You have to sit there and say, what has to happen for things to get, we have immense optimism and there's immense pessimism. We have not seen immense pessimism, have we, Mo?
No, not yet.
I mean, even look during COVID. During COVID, how long was pessimism for? A month or 2?
Yeah, it was until the government stepped in and said everything's going to be fine.
And that's got to stop at some point. You look at valuations. Every day in our community, 2 or 3 times a week, I will post a stock market to GDP ratio. We're overpriced by 76.6%. And for those of you who sit there and say, well, that metric doesn't matter because of blah, 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 and give me 8,000 reasons, which I love hearing because that's what we have to hear at stock market peaks. Let's look at the 10-year cyclically adjusted PE ratio. All it cares about there is, let's take the earnings of the S&P, bring them over the last 10 years, bring it to today with inflation, and where's the market at? We're at 30.81. Historical average is 17. We're actually worse. We're 80.5% above the historical average. So you have to sit there and say, what does that mean about the future? I don't know when it's going to happen, but you have to be comfortable with lower returns. So what's possible? Is it possible we go stagnant for a while? Sure. But I ask you a question. Go back in history and tell me when stagnant for a while has occurred over 10 or 12 years as a straight line. Versus, Mo, what usually happens?
Up and down.
Like that. It's still stagnant, but you're going to have, because guess what, guys? There'll be some new glitzy, glamorous thing that everybody says, oh, stock. Remember one thing, the S&P is even over the last 2.5 years. Mm-hmm. Even. That's a pretty remarkable thing. It's even for the last 2.5 years. Eventually people will go, wait a second, I'm not getting any returns in the stock market, but look over here. I can get returns here. Look at Bitcoin. It's up 150% this year.
This is funny. I saw this story yesterday. Crypto execs say bull run is underway and could lead to $100,000 Bitcoin in 2024. And I think it's funny. I commented on this post and I said, it's funny that the last time we heard this was when the price was soaring. So because the price is going up means that this is the new bull market.
Maybe. It's possible.
Didn't happen last time, but.
Well, it's possible. The thing with Bitcoin is they said it's a hedge for inflation. Inflation went up, Bitcoin collapsed.
Yeah, great hedge.
Yeah, that's not, I mean, that's.
Sorry, you don't know what the definition of a hedge is if you believe that.
So I look at this thing, okay. When we sit here and we understand that every investment is the present value of all future cash flow, that's what we're trying to teach on this channel. Then you have to sit there and say, what are the projected cash flows you will get from any sort of investment in the future? The more you pay for that, the less your return. If I told you right now, that I was going to give you $1 a year for the rest of your life, what would you pay me for that? Well, you'd sit there and say, you'd think about things like, well, what's my expected life expectancy? How likely is it that Paul can pay that $1 per year? Let's say you're going to live 50 more years. Would you pay me $100 for that $50 in the future? Of course not.
Well.
Would you pay me $1? Yeah, all day. All you do is live 1 year and you get the $1 back. These are at some point in the middle between 1 and 50. It's going to be some sort of number you sit there and say, that's worth my risk. That's all we're doing when you buy a company. You're trying to sit there and say, how likely are the cash flows in the future going to be? And we don't know what those cash flows will be. But if you have a basket of stocks, a basket of investments, you can make some assessments on that and say, oh, okay, well, I think I'll get this, and therefore I'm willing to pay X. You'll be right on some, you'll be wrong on some, and you'll probably be reasonably right on a lot of them. And that's the whole goal. Sorry, you'll be right on a lot of them. You'll be really right on a few of them and really wrong on a few of them. That's okay. But here on this channel, what we're trying to discuss is what does the future look like based on the assessments today? And it just feels like a little too easy to make money. We all out there know people who are sitting there saying, oh, just buy this. The stories are great. But as Professor Oswald says, numbers without a story is just a spreadsheet, and a story without numbers is just a fairy tale. And it feels to us like it has been for a few years, and I understand that people say, Paul, you've been saying this for a few years. It feels to us like the story has been the predominant issue as of late. It hasn't been about what does that story lead to in terms of the numbers? What's the story behind the numbers? That's what we have to understand. And if you understand that metric, if you understand that idea, you'll probably do well in investing. If you can sit there and say, I'm not going to chase the story, and I'm not just going to solely go based on the numbers. It's combining those two together, right, Mo? Mm-hmm. And right now, to us, what story has to happen to make this a reasonable metric? What story has to happen to make this a reasonable metric?
And so many other metrics too.
Yeah, and so many other reliable metrics in history. Why would it be different this time? What's the reason why it would be different that stocks can be at a much higher valuation? Listen, I can tell you a story that makes sense. Back 100 years ago, we had a very, very capital-intensive economy. You had to build factories. You had to own a lot of land. You had to do all these things in order to generate income. Now you don't as much. So I can understand an increase in valuation. The question is this increase in valuation appropriate? That's the question. I don't know the answer to that. I would say that this seems a little high, just like this seemed a little high. The dawning of the internet age was probably one of the biggest changes to history. And we go back to there, and we're crushing those numbers. The highest it got here is 56% overvalued. And we're at 78%, 76%, and 80% overvalued right now. I look at that saying, what is more likely? That we're going to have some reversion back to the mean? Now, it doesn't mean that you can't make money. No, what we're trying to do here is teach the process. That way, if and when stocks become more reasonable, whether that's through a crash or through fundamentals getting significantly better, you are prepared. That's what we want to do. We want you to be prepared to understand the companies that make sense to you. We want you to be prepared when stocks fall, you look at it as the opportunity, not as the fear. We want you to get excited. In our community, guys, I'm telling you, when we have big red days, the excitement in the community is incredible. Isn't it, Mo?
Yeah.
We get excited. We talk about it.
Yesterday was pretty good.
Yeah, yesterday was pretty good.
It was okay. I mean, it was pretty good.
And now look, the NASDAQ's up. The Dow is down 0.4. The S&P is down 0.2. But who knows what's going to happen? Any given day, it's a coin flip, whether we're going to be up or down.
Yeah.
But the one thing that's true is that if you have the right process and you're able to withstand the down markets. And in our community, what we're trying to teach people is don't just withstand the down markets, embrace them, love them. You will do very well. You will absolutely do very well. Because over a 20-year, I don't think there's ever been a 20-year period in the market where the market's been down. Doesn't mean it won't happen, but it's never happened before.
Get things on sale.
Get things on sale. Your favorite thing to buy in the world, make that stocks. And behave like it is the actual physical thing you love. Whenever your favorite thing at the store is on sale, you buy more of it. We want you to feel that way about stocks. That's why you need to subscribe to our channel. That's why you need to join our community for a 7-day free trial at everythingmoney.com. Ding. But literally, this is the reason why we have this channel. We want to change everybody's thinking. Not everybody. It's not possible. It's not possible to change, but if it makes sense to you that you want to get things on sale at home, why would you not want to get things on sale in the stock market? Of course you do. Now, is it hard to see your friend buy NVIDIA and Tesla and have these stocks go? Of course it's hard. For me, it's not hard anymore. I programmed myself after a long period of time, but guess what? I started out just no different than the average person. I am the average person. It's just I look at things just a little bit differently. When I see everybody flocking to investment, I think to myself, I don't know about that. When I see everybody running away from investment, it makes me go, maybe I should take a look. Because at the end of the day, guys, Mo and I have learned that when people are flocking to something in the masses, they're probably over-exaggerating. It's the euphoria. It's the optimism's probably too great.
So many studies on it, too.
Oh, there's so many studies, Mo.
Yeah. There's
so many studies.
Not just in stocks and everything. Everything in the world.
Everything. My joke is with people that I'm so... I disbelieve the masses so much that everybody says the sky is blue, and I go, is it really blue? what are we seeing wrong? And it's my exaggerated story to sit there and say, that's how I want you to feel. But that doesn't mean I want you to feel like the world's falling apart. The world's not falling apart. Even in the pits of the Great Depression, the pits of the Great Recession of 2008 and 9, you have to sit there and say, the world will get better. The world absolutely will get better. No matter what the stories are out there, the world will get better. That's the point. During immense optimism, the world can't get bad. During immense pessimism, the story is the world can't get better. And those are the best times to buy. It's the scariest time to buy, but that's why the people who are able to buy at those times do the best. So if this makes sense to you guys, subscribe to our channel. I appreciate your time.